Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't have to, and today we are talking about SoFi Technologies SOFI stock and how analysts think this stock could literally 10x or even over 10x because they are going to be the Amazon of finance. In this video, we're going to be going over the latest news updates, the price targets according to analysts for SoFi, and we are going to determine if SoFi Technologies is a good buying opportunity right now. For more videos on SoFi Technologies, remember to go and smash that like button right now, subscribe if you are new, comment your thoughts down below, and without further ado, let's jump right into today's stories. So first, we're going to outline what SoFi is, and we're going to highlight 3 reasons to buy the recent dip on SoFi Technologies. Currently, SoFi Technologies is trading for around $8 per share right now, which is a fantastic discount, especially if we compare it to their all-time highs. However, the low-end analyst price target for the stock over the next 12 months is only $12 per share, so we can get a fantastic amount of upside opportunity if we decide to buy now at $8, and even though the most bearish negative price target is $12, we're still going to make some pretty good gains off of it. However, the average 12-month analyst price target for the company goes all the way to $17 per share, and the high-end most bullish positive price prediction for the stock is $22, and these are all 12-month estimates, so at minimum, we could at least double our money if the most bullish analyst price target is correct. Right now, around 12 analysts cover the stock, with around 5 of these analysts saying to hold the company, and 7 analysts saying that this company is a clear buying opportunity, with none of these analysts saying to sell the company or stock, and none of them say that the stock is going to underperform. Right now, the SoFi stock price is trading at a fantastic discount because it has fallen around 60% since its all-time high regarding the various macroeconomic, geopolitical, and the overall tensions happening in politics, the economy, and the overall stock market. So despite this very negative bearish sentiment that investors seem to have right now, investing into SoFi Technologies is going to be a fantastic long-term buying opportunity specifically right now because SoFi has the capacity to become a major player in the emerging finance technology market, also known as the fintech market. If you didn't know, SoFi Technologies offers an all-in-one inclusive app that offers everything that someone would need in terms of financing. They have loans, they have mortgages, personal loans, student loan refinancing, investment services, money management services, and a plethora of other financial products that are very useful. Literally, when you download SoFi's app, you really don't need a bank anymore because they have everything someone would need. And this would include things like debit cards, credit cards, checking accounts, savings accounts, and they are also very competitive in these various spaces. So despite the SOFI stock falling, the fundamentals of this overall business are absolutely fantastic, and we're going to highlight 3 different reasons why I personally am buying more SoFi stock right now. The first reason is that SoFi could become the Amazon Web Services of fintech, mainly because they are truly the one-stop shop financial services platform, and they are very comparable to other major bank institutions, but they actually have less overhead than the majority of larger banks. They are building a very successful BaaS, also known as a banking as a service business, and so far this has worked out very well for the company based off of its acquisitions of both Galileo as well as the recent acquisition of Technisys, which I already did a video on. If you didn't know, Technisys is a cloud-based company that is focusing on core banking services, and SoFi expects this acquisition of Technisys to actually save them and reduce their operating costs between $75 million and $85 million between 2023 and 2025, on top of adding hundreds of millions of dollars from the services that Technisys already offers their existing customers. The CEO of SoFi Technologies even compared SoFi to Amazon Web Services by saying that SoFi is operating in the fintech space in a similar way of how AWS, which is Amazon Web Services, operate in other niche markets. So if SoFi could successfully pull off being the Amazon Web Services of fintech, this company could easily 10x according to analysts. Even more good news is thanks to their acquisition of Technisys, it opens them up to the embedded finance market, which is anticipated to grow nearly 1,000% by 2025. Right now, in 2022, it's worth around $22.5 billion, and by 2025, the embedded finance market is supposed to reach around $230 billion, and SoFi Technologies is going to be a part of that, which is going to drastically improve their overall total addressable market, which is fantastic news. The second reason why SoFi stock is a clear buying opportunity is that they are an official bank, mainly due to their bank charter acquisition, and this is anticipated to lower costs and also increase their overall revenues. Right now, in terms of revenues, SoFi Technologies is being able to compete with many major institutions because they are scaling their revenues so effectively and efficiently. However, right now they are not very diversified because around 83% of SoFi's revenues comes from the same business segment, which would be their lending segment. And SoFi has three main business segments, which would be their lending, their technology platforms, and their financial services and products. However, as time goes on, you can see from the pie chart on screen that they are going to diversify themselves very well and almost equally between these three various segments. So now SoFi is not going to be so reliant on just their lending platforms, because their technology platform as well as their financial services and products are going to be able to pull their own weight. And this is going to reflect very positively on their overall adjusted net revenues, and this would equate to them bringing in around $3.7 billion of adjusted net revenues, which is absolutely insane. The reason why this number is very important for their adjusted net revenues is that right now SoFi Technologies' overall market capitalization is only around $7.18 billion. So they will be trading at a super cheap PS ratio, which means this is a phenomenal growth company to invest into, and it's also relatively safe. Wall Street analysts currently believe that SoFi Technologies is going to increase their revenues year over year by around 40%. And like I've said in other videos, if you can identify a company that has a CAGR, also known as a compounding annual growth rate, of over 30% specifically for their revenues over the next couple of years, that is fantastic growth. And SoFi Technologies is 10% above this metric, growing the revenues at around 40% year over year. Lastly, another reason why I am buying more SoFi Technologies is that literally they are trading at their cheapest valuation ever before. So this is going to be fantastic for long-term investors because fundamentally SoFi's business model is very solid. They are becoming one of the largest names in the emerging fintech space, and based on SoFi's potential growth and fundamentals, this is going to be a fantastic long-term buying opportunity in my personal opinion. But we even have more good news, because right now investors are scared of rising interest rates. Well, luckily, fintech companies as well as financial institutions are actually going to be able to somewhat benefit better than other companies in terms of the rising interest rates, which the Federal Reserve is set to implement here soon. The reason for this is because companies in the finance space actually can increase their various loan interest rates, so it's not going to hit them as hard as it is going to hit other companies, because these finance companies are going to be able to make up the difference in those rates by just increasing their own interest rates. On top of that, SoFi has plenty of approaching catalysts, including the end of the federal student loan moratorium, which means that student loan payments are anticipated to restart here in the next few months, which is going to grant SoFi Technologies millions of dollars worth of revenues. Lastly, I'm going to highlight that the stock is currently trading at only 5 times their 2022 sales projections, while also growing their overall company by around 40 to 50%. So this is going to be a phenomenal time to add more SoFi Technologies. First, I want to highlight the very impressive membership growth that SoFi Technologies has experienced as of late. In Q4 of 2021, SoFi Technologies added around 523,000 new members, which equates to around an 87% year-over-year growth increase. And this is projected to continue well into the future. So investing now is going to allow you to catch the wave of their future growth. And this is one of the reasons why I am extremely excited about SoFi Technologies' future. Also, SoFi Technologies is in a very strategic position to add even more members and expand their overall business. And this is going to reflect very positively on their lending products as well as their financial services products. For instance, their lending products are growing at a very stable rate, as you see here on the left on screen. However, their financial services products are growing at an exponential rate, and you can see that on screen, where they grew their financial services products year over year by 155%. Their lending products contribute currently around $208 million of their revenues, providing around $105 million for their overall profit contributions. However, because this fintech company has guided the full year of 2022 for their revenue revenues to come in at $1.57 billion, that would equate to around a 55% revenue increase, which is fantastic news for this overall company. If we compare this company to, say, Palantir Technologies, which brought in close to around $1.57 billion for 2021, it means that Palantir Technologies is operating at a much higher premium than Sofi Technologies, thus making Sofi Technologies technically a better bang for your buck, at least over the short term. However, I personally like both of those companies that I just mentioned. I just wanted to put it into perspective of how successful Sofi Technologies is going to be. Also, Sofi Technologies has a fantastic long-term growth trajectory for their stock price. And with the student loan moratorium ending, it's going to act as a fantastic catalyst for the stock, which could cause the stock price to surge. From then on, once they start scaling and really start becoming the Amazon Web Services of the fintech space, it's no wonder why certain analysts believe that this stock could literally 10x. And what better time to buy the stock when it's already trading at an exceptionally cheap valuation right now? If we look at their EV over sales, we can see it's been at one of its literal lowest points, and clearly we're going to use their forward 1 year's EV to revenues to sales. However, even despite this, we are literally getting the best price and buying opportunity in Sofi Technologies that we have ever had. Now, this is not to say that the stock price couldn't continue to trend downward, mainly due to macroeconomic and geopolitical factors. However, foundationally and fundamentally, the stock, as well as the overall company, are fantastic investing opportunities. So why wouldn't we want to buy such a prestigious growth stock at very cheap valuations? However, I would love to hear your thoughts down below. Remember to go and smash that like button right now, subscribe if you are new, and I will see you in the next YT video.